$12,000 of prepaid insurance represents a prepayment from March 1st, X1, to February 28th, X2. We've now used up some of that insurance because we're sitting at December 31st, X1. Therefore, we will have to reduce assets for the insurance we've used up, and that will be an expense that will reduce equity. The accounts affected are prepaid insurance and insurance expense. This prepaid insurance account is overstated because we've used up some of it. The only remaining asset is $2,000 because if you take the $12,000 prepayment, divide it by 12 months, and multiply it by the 2 months remaining that go into the year X2, there's only $2,000 of prepaid insurance that remains. We need to update this account to reflect that fact. The ending balance on prepaid insurance should be $2,000. And insurance expense for the year should be 10 months of insurance. So 12,000 divided by 12, that gives you $1,000 per month, times 10 months used up, $10,000. That should be the insurance expense for the period. How do we go from the wrong pre-adjusted numbers to the right adjusted numbers? We would have to debit insurance expense $10,000, thus increasing it, and credit prepaid insurance, thus decreasing it. Let's stop there for part 1. We'll have you take a quiz so you can make sure that you've learned the adjusting entries in this part. Then we'll move on to part 2 to wrap this up. We've just finished recording adjusting entries 1 through 6 on this listing. I'm going to stop this video here and quiz you on the material you've learned so far so that this video doesn't get too long. And then we will move on to the second part, part B, where you'll go through 7 through 20. By completing parts A and B, you will know how to analyze the information related to adjusting entries, record those adjusting entries, post them into the ledger, and prepare the adjusted trial balance. Good luck on this Part A quiz.